Why, hello there, Hector Davil here. On a previous video, I was showing you how to trade breakouts, okay? We were seeing how to trade the initial breakout thrust by simply zooming into the trigger chart as the breakout is pulling through, and then simply wait for a breakout pullback continuation pattern, again, on the shorter time frames, well, in order to trigger your entry and to ride that momentum, that initial momentum breakout thrust, probably as far as the entire width of the congestion area, or rather the projection of that entire range width. All right, somewhere in there is where we will be looking to close out our trade, or to cash out at least 50% of our profits. Right? Well, as many traders such as yourself begin to close out their positions around that level, price tends to retrace back down, because all those traders who were creating buying pressure at the breakout, now as they reverse their position, they are now in fact building selling pressure, okay, and therefore price tends to retrace down. How far does price retrace down to? Well, more often than not, it tends to retrace back down all the way to retest breakout points, meaning, well, the range boundary that got broken before, right? So price tends to do something like that, takes off as far as the entire projection of the range width. Right? Well, the range, the triangle, the flat triangle, it doesn't matter. They all work exactly the same, right? So once the momentum dies out, people reverse, or traders reverse their position, price tends to retrace down all the way back to the to this area here, to the breakout area. Okay, something like that. And what we're going to be doing now is to trade that swing pullback. And I don't actually mean to trade the retracement back down, but to simply wait for price to come back down to breakout areas, and then to trade any type of bounce to the upside we may get around that area. Okay, so again, we not only profit from this breakout thrust, but also once price once price retraces back down, which again it does happen, and it does happen rather often, well, we'll be ready to trade once again the bounce for yet another momentum swing to the upside. Okay, how do we trade that? How do we actually enter the market as the bounce takes place? Well, again, just wait for the first candle to close. Okay, in the setup chart, if you don't want, there is no need to zoom into the shorter time frames. The first candle that closes in green, okay, since we are looking obviously for a bounce to the upside, we would be looking for green candles. If we were searching for let's imagine we turned this all around, we got meaning the trend was down, we got a breakout to the downside, we triggered off any potential breakout pullback continuation pattern, price takes off, then a little bit of a pullback, and as price retraces and furthermore bounces once again in the direction of the trend, the first candle in red, okay, this time around in red since it's a downtrend, well, the first candle that closes in red, that's where we would enter the trade. Okay, if we get here a green candle, as that candle closes, that's where we would enter our long entry. Obviously a stop loss goes below the bounce point. Okay, and well, we would be looking to close our trade, we would be looking to cash out our profits in the same way that we trade standard bounces. Okay, 50% at the previous swing high, and then we would simply use the indicator projection, the projection bands, in order to close somewhere up there different small portions of our trade. Okay, no, nothing new here. You already know all this from previous videos when I was showing you how to trade bounces in the direction of the trend, right? So again, 50% of the trade at the previous swing high, and then simply use the projection bands as per the custom indicator in order to further close more small portions of the trade. Okay, Okay, let's take a look at some live examples, shall we? We are now looking into the euro against the Australian dollar on the daily time frame. In fact, I was showing you this this chart on the previous video. Let me now zoom in a little bit more. To be more specific, I was showing you guys how we would go about trading the breakout of this. Let me mark it with an actual horizontal line. But maybe not in yellow. There we are, in black. That's much better. Well, I was showing you how to trade the initial breakout there with a breakout pullback continuation pattern on the trigger chart. I'm not gonna go over that once again. You may go back if you want to the previous video if you want to see that specific example. But at any rate, not only on this specific sideways price action congestion area, not only we would manage to trade the initial breakout thrust, okay, but we could simply also wait for the pullback, for the first swing pullback to retest, as you can see right there. Actually, let me extend that trend line there. All right, do you see how price, once the momentum dies out, once this distance, the widest part of the congestion area, okay, if we extend that to the breakout point, takes us all the way there. Right there is where we run out of steam. Price tends to pull back, and it usually pulls back to retest breakout levels. Okay, so once price retests breakout levels, it's just a matter of reading price action around that area. If we get a breakout to the upside, meaning if price keeps on retracing back up against the trend, obviously we are to search for trading opportunities no longer. In the other hand, if price does indeed find resistance around that area, and from there we do see that bounce, we simply wait for the first red candle to close, or the first candle in the direction of the bounce. Upon the bounce, of course, we wait for the bounce, and then we wait for the first candle to close in that color, meaning this candle there. Do you see that that's the first red candle upon the bounce? Well, you simply wait for that candle to close. At that precise moment is where you go short, where you when you click on your sell button once again. Not only you profited from this range there, but also there. So that's exactly why this is so beautiful, because you get multiple trading opportunities within the same pattern, okay, within the same trading opportunity. At the end of the day, we are trading exactly the same thing. We are trading a congestion area that gives way in the direction of the trend and gives us two valid trading opportunities, there and there. So as that red candle closes, that's where we go short. Stop loss right above the bounce point, okay, the swing point. First target again just before hitting the previous swing low, okay, that swing low there. That's where we close a portion of the trade, 50% of the trade, and then we use the projection bands in order to close yet another 10-15% of the trade there, and so on and so forth. All right. Nothing special here, but like I say, this is a very common market event. So even if you manage to squeeze your profits here, don't just give up on this range, because you may get a second opportunity. Or alternatively, if you didn't quite get a breakout pullback continuation pattern, don't just close this chart, okay? Even if you failed to profit the first time around, who knows, the market may give you a second opportunity. All right, so it's always worth keep on monitoring this key level of support and resistance there, okay, that key breakout point. Okay, let me now show you another example. This time around on the euro against the sterling pound. It's an uptrend, and it's the hourly time frame. Okay, it's an intraday chart. As we can see, the moving average is pointing up, price nowhere near the 100, etc., etc. And as you can see here, actually, let me zoom in a little bit more there. All right, as you can see, whoops, sorry about that. Price takes off on a whole new swing of the dynamic area of support and resistance, pulls back, goes back up again, and it fails to take out the previous swing high. Okay, as I mentioned on a previous video, whenever you see that price actually fails to keep on to sustaining the zigzagging, the harmonic zigzagging pattern, usually indicates that you have a congestion area. Okay, so here price fails to score higher highs, right? Actually, it scores a double top. Do you see the double swing top there, right? So as soon as you identify that, you simply mark that level of resistance. Okay, so well, let's do it wrong. Let's do just that, shall we? We found that that double top. Price retraces back once again to the dynamic area, or rather the dynamic area catches up with price. In fact, we have some sort of a sorry about that, guys. I want to be as accurate as possible so you guys understand everything as I explain along. In fact, here we have a some sort of a flat top triangle. Do you see that? Higher swing high, but a flat line, okay, and so effectively giving us that flat top triangle. All right, like I said, I just wanted to mark that up for you. So eventually the breakout takes place. As that happens, we would zoom into the shorter time frames. This is a 1 hour time frame, so we would zoom into the 15 minutes time frame, searching for a breakout pullback continuation pattern. Okay, now if we missed this opportunity, or this momentum breakout, or even if we did profit from it, it's worth to keep monitoring this setup for a consequent pullback to retest breakout levels, okay, that former level of support. So we project that line, and sure enough, as the momentum on that swing dies out, price begins to turn around and retraces back down to retest breakout levels right there. Okay, and rather conveniently so, it also happens right off the dynamic area of support and resistance, which, hey, again, it's another plus. All right, so as price comes to retest that level, we simply wait for the first candle on the setup chart on this swing pattern here, on this first swing pattern there. We don't really have to zoom into the trigger chart at all. Okay, we can trigger straight from the setup chart. So again, we wait for the first candle to close in the direction of this bounce, meaning obviously green color. That's the that's up on the bounce, the first candle in green. So as this candle closes, or what's the same, as the new candle opens up right there, we enter long for a second trading opportunity. All right, this is the first one, this is the second one. First target, as usual, right there, as per the previous swing high, or maybe a couple of pips before hitting that level, and from there on we simply base our next consecutive targets as per the projections, okay, as per the projection bands, and that's it. Again, nothing special here. We are just trading a second chance of a breakout upon the first swing pullback on the setup chart. First target, second target, and you keep on riding for future profits in there. All right. Well, anyway, I believe that's pretty much it. I believe I've pretty much said everything I had to say as far as trading breakouts, okay, both the initial thrust and the next move up on the first swing pullback, and that's varied. I mean, 2 trading opportunities of one single congestion area. Well, not too bad. The more the merrier, isn't it? Anyway, again, I hope you enjoyed this video. Cheers.